When it comes to forecasting future interest rates, the Federal Reserve's dot plot can be a useful tool, as it shows the forecasts of each of the FOMC members. However, if you've never seen the dot plot before, it can be a bit confusing to know what you're looking at. So let's quickly run through how to read the Fed's dot plot. Looking at this graph, we can see a series of dots, and each of those represents an FOMC member's forecast for the Fed funds rate. So each time period, which is shown on the bottom axis, will have a dot for each forecast, and that represents where that particular official thinks the interest rate will be at the end of that time period. So a dot in 2024 shows the forecast of that official at the end of 2024. However, the dot plot is anonymous, so while we don't know which dot belongs to which policymaker, we might be able to make an educated guess, because those who are more hawkish are likely to represent higher dots, while those who are dovish are likely to represent the lower dots. Now, a lot of the time we get these clusters, and that's generally seen as representing the central path that policy is moving towards. So if the cluster shows that interest rates next year are forecasted to be lower, that could signal by how much interest rates will change. If the clusters are generally aligned around the same area, that could signal that the members are in some agreement about where interest rates are heading. But if there's more of a spread, it shows there's a bit more uncertainty there. You may also notice that between each of the percentages, it's split into quarters. And that's because when the Fed does change their interest rates, it often does it by 25 basis points each time. So in a way, we could think of each of these rows as representing one rate hike each. So that could signal how many hikes or cuts are likely in the coming years, although that won't always be the case. As we saw during the pandemic, for example, they did go through a 75 basis point hike, but that's not usually the case. It's often 25 at a time. But although the specific numbers for the interest rates are important, they're arguably not the most important thing about the dot plot. You could say that it's the movement in the trends that matters more. So for example, if a new dot plot is released and the dots are higher on average than the previous one, that might suggest a shift towards higher rates. Or alternatively, if it's lower dots than the previous one, that may signal a policy shift towards lower rates. And these changes, these sort of signals of policy shifts, are likely to affect the markets because they could eventually affect the economy. For example, if the dot plot suggests a shift towards higher rates, that's likely to result in a slower economy if that takes place. Therefore, it could impact businesses, and investors may reevaluate their equity or bond positions, and so on. Many other sort of knock-on effects. But it's important to note that when we're reading the dot plot, we don't just look at that in isolation. Usually the chair of the Federal Reserve will explain the reasoning behind the changes in the dot plot following on from their FOMC meeting, and it's also released as part of their economic projections, which includes updates to things like economic growth, unemployment and inflation, which may add more context behind the dot plot and the changes that have taken place. Now, since the Federal Reserve is data dependent, we shouldn't take the absolute numbers as a confirmation of where rates are heading. Something could happen in the meantime in terms of the economic data we see, and that could cause a complete re-evaluation of the rate forecasts. So it's important that we also pay attention to economic data and don't just take the dot plot on face value. So overall, the dot plot is showing us where rates may be heading over the longer term and how many rate hikes we may expect during that period. Since markets are forward-looking, we should pay attention to any changes that take place in the dot plot. So now you have an understanding of how to read the Fed's dot plot, so in future you can read and interpret what it's showing you and what it may be saying about the future plans of the Federal Reserve.